The Everything Apartments podcast is provided with support from the Apartment Association of Greater Los Angeles, better known as AGLA, serving residential landlords throughout Southern California through education and advocacy. Visit aagla.org. Hello, everybody. Eric Christopher here, and you're listening to the Everything Apartments podcast, where we dig into all aspects of multifamily investments, from buying and financing properties, day-to-day operations and management, and also reinvestment strategies. Being an apartment broker and property manager for about 19 years here in Long Beach, my travels with discussions with owners over the years and up to the current period, there's always sort of a, hey, tell me what's going on in the market. And, a lot of us are busy. We may, a lot of you may not be doing this day in and day out. You got other careers and other things, and investments are definitely part of your life, but you don't, spend every day thinking about it, maybe like somebody like I does. So what I like to do every 6 months or so is do a recap of what's going on in the sales market of Long Beach. That's always a dynamic thing. It's always sort of moving in one direction or the other. Got a lot of moving parts there from lately interest rates, obviously prime on a lot of people's minds, but then what's the income potential? What are the rents doing? What can I get for my next unit that I have a vacancy for relative to what it was a year ago or so? So we'll dig into a brief summary about what's going on in the Long Beach multifamily market, both 3 and 4 units, which is a little bit different class of animal than the 5+. But first, I'll tell you about our firm, WSC Realty Advisors and WSC Property Management. WSC has been helping buyers and sellers and managing apartment properties in Long Beach for right around 19 years now. Let's say you're tired of managing your own units. You want to travel more, relax more, not have to worry about the 4 T's of management: tenants, toilets, termites, and trash. Or maybe you have a manager and you're just not quite getting the response or the results you're looking for. We can definitely help you. Isn't here to be the biggest management firm in Long Beach. Instead, we say smaller and more agile to bring you the quality of service you want. For example, we get our owner reports out to you by the 10th of the following month of the activity. If that doesn't happen, your next month of management is free, but we've never failed that. We can also help you if you're looking to buy or sell assets, 1031 exchange scenarios. We recently put a seller of an apartment building here in Los Alamitos into a single tenant net leased investment, which is a pretty neat little retirement vehicle we can kind of educate you on if you haven't looked into that. We've also got some inroads into out-of-state markets where, let's just put it plainly, management's easier. The government's a little more on your side. So whatever it is, visit WSC-PM.com, call, text, or email me. That information is in the show notes, or if you're watching on YouTube, you can see it right next to me. Whatever the challenge is with your property, WSC has a solution. So as a lot of you may know, I'm kind of a data junkie. I began tracking every sale of multifamily from 3 units up in Long Beach in 2010, and I've constantly optimized this spreadsheet. I've got it doing what I want, and we keep it up even to this day. And what does that mean to you? You say, well, okay, let's take a look at sales trends for Long Beach over the last few years. Okay, so this would be real good to look at on YouTube. Obviously, it's going to be highly visual, so if you're listening, great, but go back and check out the graphics when you get back. So as you can see, I've got 5-year trend here. This is citywide, and the kind of more bright blue, Dodger blue color are the 3 to 4 unit properties, and the little bit darker blue are the 5+. So essentially what you saw is from 21, we recovered out of COVID. There was a little bit of a shock there, but it came right back in 2021. But we have been sloping off on both products since 2021 on quantity of sales throughout the city. Now, the good news is, after the interest rate hikes that we saw kind of really hitting in 2023 into 2024, the markets have priced in that difference, that paradigm shift that we were so used to. We were drunk on sub 4% rates. And what happens over a period of time after sort of that paradigm shift is the market says, oh, okay, well, I guess in this market, we'll have to sell for this or buy for that. And as you can see in 2024, the transaction volume improved quite nicely. Now, don't pay too much attention to 2025. That's a little seedling just coming out of the ground. But what a good barometer it is the final two bars there on the right. What that is a 6 month rolling trend. So we forget the year that you're in, and we just take this month and count back six. And if you kind of extrapolate that and double, we're trending at least right now on about the same number of sales in 2025. I should say at least the rolling six shows us that. If we doubled those two numbers, certainly the 5+ is going to be a little less. If we had 38 times two, it's not going to meet or beat 98 sales last year. So the interest rates, also the fact that a lot of the 3 and 4 units are being purchased to live in one of the units. So you've got an owner occupied situation drives demand. And we always see, as you can kind of tell, the 3 to 4 unit always has more pure transaction volume than the 5+. Now that's about as good as the citywide can do, because if I start looking at price trends on a citywide, well, hell, we don't know what the distribution was between the high price zip code 90803 and the low price zip code 90805. We don't know what the mix up of that is. So if I was to look at price trends on a citywide basis, it probably could throw us off based on not knowing the distribution of the zip code. So knowing that we can't really look at price trends across the whole city, again, not knowing what the makeup of the zip codes are and how expensive or medium or inexpensive, relatively speaking, they are, we've got to pinpoint in a like-kind market. And what I mean by that is we'll take a zip code 90813. Let's look at 90813, which represents a central Long Beach, blue collar, a lot of C-grade product. But the reason I like it is it registers each year the most sales across the city. So what we have is a like-kind zip code, a garden variety vintage of age, and I think we can do a price trend analysis a little easier than we could across the city. So what I show you here is the volume within 90813, and you can kind of see a similar trend on both product types. Pop out of COVID, 21 was really strong, and then we've been declining since. And again, the major reason for that probably 2023 is when we saw the rates really start to explode upward. 2024 nearly paralleled the 2023 register. And then if you look at the rolling six, hey, we're probably on pace to be about where we were in 2024. But more important here is we wanted to look at price trends. So what we've seen happen over the last 5 or so years, 4+ years, is had the little bump and the volume picked up, and thus prices picked up. Both product types saw an increase in 2021, and then look at the 3 to 4 market had trended, peaked out in 22, and kind of slid a little in 2022 through 2024. The rolling six kind of shows that's prevailing. On the 5+ side, you're bobbing around the $350 per foot range, little dip in 23. And what's going on now is we're seeing that the market has, basically matriculated to the new environment with both interest rates and insurance. Now, where does that leave us on a GRM basis? If we're looking at the 3 to 4, hey, 2020, we're pushing upwards of 16 times gross in 90813. And that kind of has been bobbing around the 15.5 range. But look at what happened in 2024. Seeing that start to slide a little. Now, 2025 is just a little too new to kind of analyze that. But in the rolling six, we have seen a decline down a couple points off the top of the GRM scale. Looking at the 5+, hey, look, we were just around 13 in 2020, got real hot. 2022, 2023, trying to push to 14, and now we've been sliding a bit on that. Now the rolling six on that one looks artificially low. We just didn't have the transaction volume in the last 6 months in that market to register, but you would kind of make the assumption that it was still running at about the 13 times gross level. So what's happened overall is, again, the market is acclimated to an interest rate environment that was much different than we were swimming in sub 4% rates. The insurance market is going to continue to challenge us. I'm sure we're in for more roller coaster ride around that with the wildfires that we had. And then what will rents do? Rents are on a pretty decent trajectory. So the assumption I would make in the 90813 is that as this year labors on, that we'll probably see that 13 times gross number still sticking to what's going on in the market. So, folks, I take this kind of analysis onto each and every zip code in the city of Long Beach, and I've done that for many years. And what it does to help you is gives you a very good idea of a trend in your particular zip code where you own, basically can look at your books and records of your building, compare those to not only this, but the most recent 3 to 5 sales comps. These are obviously all the properties of different age groups and different configurations. And what we do on the second level analysis, one-on-one, is we look at the 3 to 5 most recent sales that are very like kind to your building. And this way we can get you a pretty good value in today's market, maybe perhaps talk some strategy around what you might want to do if it was exiting this asset and where you might go to, I don't know, make your life easier and increase your cash flow. So I'm here to help you with that. Again, thank you for listening. It's been the Everything Apartments podcast, and I'm your host, Eric Christopher. Stay tuned for another episode coming soon.